Afternoon, welcome to One Financial Markets Non-Farm Payrolls commentary. We've got 2 minutes to go, and we're just going to go over, to see the markets prior to the release of the figure. We're looking for a survey of 180 with a par of 187, but we've just been discussing around the desk, and one of the guys made a very valid point. It's about average hourly earnings. If we see a kind of damp or a flat figure, then we have to look at the hourly earnings and see if they've increased. If they've increased, then we look to the Fed looking to hike rates because it will be inflationary. If there's more money or people are being paid more, they're likely to go and spend more. And if they spend more, they're likely to put prices up more. And if prices go up, the Fed will need to stabilise the inflationary environment by increasing rates. But if we're looking at the payroll numbers itself, at 225, we should see a dollar bid. Anything under that, it should be risk on as balance sheet normalisation, and interest rates will not be talked about for a while, and therefore financing for banks and the equity market and the dollar will be kept low, and that will keep the status quo as it is now. So we're just, if you're looking at the charts we have now, we've got how many seconds? 20 seconds before the release now. We've got euro dollar in the corner here, gold, the dollar index which we're looking at, and the Dow. As you can see, the price action here, spreads are starting to widen out as people try and figure out what's going to be happening. As soon as the results released, I'll tell you what it is, but then we'll also have a flash to the prices. 205 better. So there we go. Euro off, dollar index through the roof, Dow flat, gold off. Only smalls though. If you're looking at the euro now, we've only come off effectively 25 pips, so let's not get carried away. Sterling yen, notable one, which has gone through the roof. But let's just by another 100. Let's just see how the market pans out here. Gold off small, buys another 100. Gold off small here. $6 now, don't worry about that. Euros. Now we'll just watch this, right? So we've had the figure is better. So therefore the market is obviously they're anticipating an interest rate hike, dollar appreciates. However, when you have something like that, you have to also think there's probably going to be a risk on sentiment. So the euro and euro here being off slightly, I fully expect that to pull back. Gold sentiment off. People will start to bring that back in line as well. It's 25 better than the survey. Average hourly earnings flat. So this is purely on the higher sentiment here. Dow's is starting to take a bid now, but it's the dollar. If you can see in this dollar bottom right corner here, dollar index has taken a bid. Based on the higher number. The higher number can mean that definitely the Fed can potentially hike in this year, as it was pretty much avoiding that recently, but also that it means that there might be some inflationary issues, because average hourly earnings is actually one of the top, up just as 0.1%. But if you're my analysis of it is probably a better buying opportunity for in your risk crosses like euro dollar, and the dollar index will just continue to be lower. The lower dollar is playing into the hands of the equity markets, and so they like it being pegged down here. A good number, but I expect this to be fully retraced. So let's just keep an eye on the markets and how it trades out. But from the front lines, I'll speak to you later on.